Obviously, the big story and likely to have a significant impact on the market today. Firstly, though, what do you make of the change of leadership? Given Sam Walsh's track record, is it a step in the right direction?
I think it is a positive for Rio Tinto. Really what we are seeing is a cleaning of the slate and a new start. And if we have a look at the iron ore space, we really have seen the fundamentals improving. We've seen that iron ore price not only stabilising but growing quite strongly from the lows that we saw in September. And for Rio Tinto, we are seeing, I guess, a new phase for the company. The new CEO, Sam Walsh, has actually been with Rio Tinto for a massive 20 years and 4 years on the board as well. For the last 8 years, he's been head of the iron ore division, and we know that iron ore has been the key driver of earnings for Rio Tinto. In fact, it makes up about 90% of earnings for Rio Tinto. So certainly a lot of experience and very well regarded. So I think the market will like this announcement. If we've also seen some other heads roll as well, and Doug Ritchie will be going. He was the head of strategy, and he was really behind the acquisition of that Mozambique coal asset Riversdale 2 years ago. So we've seen his head roll on the back of those write-downs. But also Guy Elliott, who's the Chief Financial Officer of Rio Tinto, has previously flagged that he's looking at stepping down at the end of 2013. So it does look like a bit of a management shake-up at Rio Tinto, really on the back of those huge write-downs that we've seen coming through. But I think the market will back the changes that have been made.
Okay, because we have seen a few broker upgrades, as we mentioned, Citigroup lifting its target and warning investors not to overreact to the day's news. Do you think that will help also to cap any losses we might see in the stock today?
I guess if we have a look at how Rio Tinto shares traded in London, they tell quite a big story. Initially on the open on the back of this news, we actually saw Rio Tinto shares down a massive 4.8%. But by the end of the session, we had only seen a 0.5% move. And I guess if we have a look at this $14 billion worth of write-downs in light of the short-term performance of Rio Tinto as well as the medium term, in the short term, really what it means is that the February results that are upcoming will probably see a loss for Rio Tinto in the magnitude of about $4 to $5 billion. The market had been expecting the write-downs, but had been expecting them in the February results. But I think the size and the magnitude of the write-downs comes as a surprise. But in the medium to longer term, often when we do see the slate clean like this and the huge amount of write-downs, it usually signals a positive phase for the company. We've seen those write-downs now behind Rio Tinto. We've seen iron ore fundamentals improving, and as long as we see stabilisation or improvement in terms of iron ore for Rio Tinto, it does look like it's got good cash flow coming through, and it looks like it could be a positive phase in terms of share price performance over the medium to long term. If we break down these write-downs, 14 billion is a massive number. Most of them come from the aluminium assets, about 11 to 12 billion dollars from the aluminium assets, and that takes the total aluminium write-downs that we've seen to a massive $29 billion. Of course, this is really on the back of that Alcan purchase back in 2007, just before the global financial crisis. They bought Alcan at a price of $38 billion, and we've now seen about $29 billion worth of write-downs. So there's some huge numbers there. I guess some smaller numbers coming through from the Riversdale acquisition, but I think it's also significant. $3 billion worth of write-downs. Now, Riversdale, the Mozambique coking coal asset, it was bought for $4 billion just 2 years ago, back in 2011. So in a space of 2 years, we've seen 3/4 of that acquisition value being written down, and that really signals that Rio Tinto did pay too much for an undeveloped resource of coking coal in Mozambique. So two acquisitions, the Alcan as well as the Riversdale acquisition, which have really gone against the company. We've seen a number of changes. In the short term, I guess there's going to be an impact in terms of this reporting season and the numbers which are coming out in February, and we'll see a loss there. In the medium to longer term, though, really wiping the slate clean, and it could be a positive for Rio Tinto in the medium to long term.
All right, Julian, let's move on to that other major focus today, China economic data due to drop around 1 p.m. Eastern Daylight Time. The market betting that these fourth quarter GDP numbers will turn the corner. I think there's an expectation of a lift to 7.8% year on year from a prior 7.4%. We've also got industrial production and retail sales. What are you going to be watching most closely?
These numbers are important because the view of the market is that we have seen growth in China bottoming out in the third quarter of the year. And if we do see an improvement in these numbers, it's really going to support that view. And given that we've seen such good numbers coming through from China recently, the risk is to the upside in terms of these numbers. So it could help to support the Asian session, and especially the Australian market, which is so geared towards that China story. we have a look at expectations, the fourth quarter we are expecting to see an annualised growth rate of 7.8%. Now that would be an improvement from the third quarter number of 7.4%. And really over the last 7 quarters, what we have seen is a smaller expansion coming through quarter to quarter. And that would be a breaking of those weaker growth numbers that we've seen over the last 7 quarters. What we have seen in terms of China to really help boost the growth rate in that fourth quarter are the infrastructure projects in China, and that's really helped to stimulate activity. So I guess one of the things to watch for is when those infrastructure projects come to an end, because then we want to see domestic demand really feeling that forward. But also what we have seen is a hold on the tightening in terms of monetary policy. And yesterday we saw some numbers coming through from the banking space in China, which really supported that we are seeing more money being pumped into the economy. We saw the top 4 banks in China saying that for the first 2 weeks of the year that they had made 290 billion yuan worth of loans. And that suggests that we'll probably see about 1 trillion yuan worth of new loans in January. And January is quite significant because it makes up about 20% of the new loans for the year. So it's quite a heavy month in terms of lending. Of course, we'll see a whole sweep of other numbers coming out today as well: industrial production, retail sales, as well as fixed asset investments. We're not really expecting to see much of a move from the November numbers. Industrial production, we're expecting to see a result of 10.2%. That compares to 10.1% in November. If we have a look at retail sales, we're expecting 15%. We saw it at 14.9% in November. And then fixed asset investment, we're expecting it to remain steady at 20.7%. So a massive day in terms of these Chinese numbers. The risk, I think, is to the upside given the positive news that we have seen recently flowing out of China. And if we do see a positive number to that fourth quarter GDP number, that would be good news for our miners today.